Yeah,
Look at his face.
yeah. Too up, too down.
Look at his
Hey.
face.
Yeah. Yeah, I wanted the crown and to be celebrated. I rented a tux and I ordered a mink. Stood in the mirror like mama, I made it. Proceeded to brush in the teeth in the sink. Caught me a grill and I'm so melanated. I polished the chain, I ain't gold in the link. And I got me a baby who gave me some babies. I'm raising a lady and building a king. Too cold, you too busy running with another man lane, I guess. Yeah, too bold. I be running on the one way, never change my set like, I don't ever use my signals, yeah. I be in the lane myself, yeah. I don't gotta change my mental, yeah. And I ain't gotta chase my wealth, and I accept my daddy got a kingdom, and everything I ever got is his. If I ever got a problem, I'ma seek him. I never doubt him, been about his biz, oh man, been there. I ain't gotta ride on the wave when the ocean is his. Close with the kid with a
Florida homeowners falling behind, 401ks at risk, and how to choose the right general contractor. A major financial pressure wave may already be forming beneath the surface of the U.S. economy. We're now seeing Florida homeowners reportedly struggling with mortgage payments, growing concerns about inflation and the national debt, and warnings that retirement accounts and 401ks could face pressure from long-term monetary policy, and investors losing massive amounts of money by hiring the wrong contractors. In this episode, we break down why some homeowners are falling behind, how inflation quietly impacts retirement savings over time, the debate around inflating away national debt, and how to properly vet and choose the right general contractor for your real estate projects. If you're investing in real estate in this market, protecting your capital is just as important as finding deals.
yeah. Man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking whole pie, that's so crazy. How I got a shot, raised the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shelter. It's enough water from the most high, even low tide, he gon' wet you. Better learn.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff back in the saddle again for another edition of Real Estate Friday Live, known as Investors Edge Podcast. Cliff, man, how you doing? Big time? Doing all right, big dog?
Yeah, man, doing good, doing good.
And how was the week, man? Was the week pretty good, man? Did we get the bag?
Yeah, man, it was a good week, man. It's busy, a lot going on, so can't complain, man. It's a good week, positive.
Yeah, salute Alonzo. We see you, salute big dog, man. Yeah, it was a good week for me as well, man. Long but good, man. Because man, tomorrow my baby girl she graduates from college, from high school tomorrow, big dog, man. So
it's a big day.
Praying, man. Pray for your partner, man, guys. If you could, guys, real quickly, guys, like, share, and subscribe. And if you're on any platform, click on the little bell so when Cliff and I come live, come kick it with us, man. So it's gonna be good, man. So tomorrow, Cliff, is gonna be a very emotional day for your partner, man, because my baby girl is graduating high school, man. So it's something, man. Yeah, I'm getting old, baby. I'm getting old, Cliff, man. I'm getting old, man.
Man, that's all good, man. That's nice. That's you made it to the end. That's the point, though. You made it to the end.
Yes, sir. Yes, so guys, we got a good topic for y'all. Today, man. Real quickly, guys, what's up on TikTok? We see y'all on TikTok, man. Number one, man, we got some issues going on in the real estate market and this debt situation right now, man. Florida homeowners have stopped paying mortgages, not the luxury homes, Cliff. We're talking about the mid-tier homes, the retail homes, $800,000 and below. Number two, your 401k and IRAs, your retirement accounts. Could they be in trouble due to the fact that the government is trying to inflate the national debt away? That's going to be going to talk about that, guys. And number three, guys, how to choose the best general contractor for your deal so that you don't lose money. This is a skill that most people do not know how to do. We've lost a lot of money doing this, Cliff, in the past. So now we got to give you guys some game. Am I right, Cliff? Am I off? Am I right?
No, definitely. Been through that a bunch of times, man. There's a way to do it and there's a way not to do it.
Yeah, guys. But let's dive into the first topic real quickly, guys. We have to dive into our first topic. This is our first topic where we're going to be talking about, hey, Florida mortgage pressure rising right now, guys. Why some homeowners are beginning to fall behind on their payments. This is a big deal, guys. This smells a little bit, in my opinion, like 2008, guys, because Cliff, this happened in 2008, man. And what happened with that, man, was I made a ton of money during that time frame. I really did. So here, let's dive into this real fast, guys, and then we're going to get our commentary. Let's get it in. Here we go.
Foreclosures are now surging across the state of Florida in 2026, and this represents the next wave of Florida's housing market downturn. Many people told you that this was impossible, that this would never happen again in Florida, yet it's happening right now, and it's actually creating huge discounts for buyers and investors out there. With Florida now leading the country in home foreclosures. According to research firm Adam, there was 118,000 U.S. properties with a foreclosure filing during the first quarter of 2026. That was up 26% from a year ago. However, in Florida, that growth rate is 44% year over year. And if you go on Zillow, you can see that there's over 1,000 properties listed in Florida right now that have the word short sale in the listing description. Jeez. For instance, this is a 5-bed, 5-bath house, 4,300 square feet that was built in 2023. It looks pretty nice. Well, the owner bought it for $705,000 in September 2023, and now it's listed for $600,000, a $105,000 loss.
Cliff, did you see the size of that house? It's not a small house, is it?
No.
That's a good size house. Would you agree or disagree?
Oh yeah, that's a good size home. Yeah.
I mean, guys, this right here is this is real, and this is Florida. Now you're going to hear a lot of commentary, people talking about, hey, wait a minute. Well, we heard on Fox News that what's going on right now is a lot of properties are selling. Yes, that's the luxury homes, $10 million and above, not $600,000 and below. Look at this, guys. This ain't nothing new. Let's just get into it.
And in the listing description, it says it's a short sale. Here's another property in Orlando. The previous owner purchased this property for $415,000 in 2023. Now it's listed for $334,000 in 2026. That's an $80,000 or 20% loss, also listed as a short sale. And a couple of years ago, when I moved down to Florida in 2024, that was the beginning of the downturn.
Yeah.
The inventory spiked, the prices started to drop, and sellers started doing price cuts back then.
Yeah.
Fast forward now 2 years, and we're seeing this next wave. And as we see more of these mortgage defaults and short sales, it could put even more downward pressure on prices in Florida going into 2027 and 2028. Because we can see, according to data available on Reventure app, that Florida's housing market's down 4.6% year over year through the beginning of 2026, through February 2026. In addition, Florida was down 1.8% in the beginning of 2025. So overall, Florida's corrected about 6 to 7% already in this downturn on average. No area in Florida is being spared from this price downturn so far. That's an important thing to understand. Some people like to claim, oh, my area in Florida isn't going down. No, folks, pretty much every area at the metro level is dropping in Florida. Even in Miami, home values are down year over year in most zip codes. But what I think is interesting.
So Cliff, real quickly, when it comes to Florida, right? What are your thoughts concerning Florida? Are you surprised by this whole scenario, or you kind of expected this?
I mean, I'm not surprised by it. I'm surprised by how many counties it reaches, across the whole state. But I'm not surprised that there's something happening in the real estate space, and we've seen it for going on a couple of years now. And we've been talking about it, and it's been more substantial the last, year, 8 months. What I'm starting to actually see is, matter of fact, probably in the last 2 months, I'd say, the amount of foreclosures or auction properties or pre listings that I've seen is going way up. So what I'm actually starting to see in the marketplace is normally you might do a handful. Now I'm doing 20, right? Where you're starting to get a lot more. Matter of fact, I actually did one yesterday, a foreclosure.
Yeah.
When you start seeing those more and more, it's happening. But I guess in Florida, it's happening here in Dallas too.
Yeah, it is. Back in 2020, 2021, during the pandemic, you saw a lot of people moving from the liberal lending states, California, New York, Washington State, and Oregon, down to Tennessee, Texas, and Florida. And you saw uptick. I told everybody during that time frame that, hey, don't get too excited about this uptick. This is a migration. This was due to migration from other states. I saw Austin, Texas, and really inflated right now. Inflated back then, and it's inflated real bad right now as well. You're beginning to see a not inflated but deflation in Austin because they overbuilt. They overbuilt in Austin. You see that in Miami as well. Also, Miami is getting destroyed right now. Even when it comes to rental rates, they're so high they're having to cut the rental rates. I'm trying to tell y'all the strategy you should be using right now, guys, if you're a real estate investor, are lease options. Lease option or lease to owns, depending on what state that you're in, is the best strategy, in my opinion, to use in this market. Would you agree, Cliff, or disagree?
Yeah, I like lease options. I think it's a win-win situation, right? The owner of the property, they get a good tenant, they put some money down, they get that monthly cash flow, and they get a payout. And to the person who's renting, you get the option to buy later. Correct. So you get your whatever you got to do, you fix it up. And a year, 2 years later, you're able to buy the property. You already have a pre-negotiated price. Yes. So to me, yeah, that's a win-win. And the other thing to recognize too is when you're seeing these foreclosures, look at the years.
Yes.
You're noticing it's a lot of new construction. That's what I'm seeing too.
Yeah.
A lot of the foreclosures that I'm seeing that are popping up are almost all built 2020 or since 2020.
Yes.
So when they were buying at that peak, when you said there was a frenzy coming back in 2020, 2021, when everybody was moving here to Florida, what happened was the houses already on the market kind of started going up, but the new construction was getting a huge premium. They were really getting on everybody. And now we're starting to see those numbers come back down and the new construction is getting hurt. I'll add one more thing, that too. Even houses that are new construction on the market now, huge concessions.
You are correct. Real fast. You're correct. My aunt just bought a new construction property in Houston, Cliff. Brand new home. No one lived in the property at all. Brand new home, Cliff. She moved in and she put down $0. $0. And it was an FHA product. Mm-hmm. When she walked into the house, she said, how much I had to put down? They said, just give us earnest money. The earnest money was $3,000. That's it. At the closing table, she got so many incentives from the home builder, they gave her the $3,000 back at the close. And I just said, what the hell? These are the type of deals, guys, that's being thrown at retail buyers right now for new construction. Because it's this no matter what Fox News tells you, CNN tells you, MSNBC, CNBC, pick a network. If they're telling you that this market is hot, they are lying. They are lying. It's not hot. This is very stagnant. You agree, Cliff? You disagree, but no.
No, I'm there with you. I'm just thinking back to a property that I did where it was a larger property, and he's upset because the valuation came in low, but he had bought the property about 2 years ago. I'm telling him the values are dropping. It was it was new construction, so he had purchased it like 2 years ago. It was new. I'm trying to tell him every year for the past 5 years, if you bought in those times, the value was higher back then.
Correct.
You've been seeing it drop. I mean, think about it. The interest rates back then were 4%, 3%. They're 6% now. How could they be as big as they were then? And then the average buyer is not in a good situation.
I agree, guys. Again, just we have a comment here from our boy Alonzo. Says Austin blew up in 2016. He says I worked for an advertising company at that period, and they had big dollars invested in Austin all day long. I got asked a lot, guys, to invest in real estate in Austin. I said no because I knew that it was overinflated at the time. And now you're seeing a constriction right now in Austin and other areas. Miami, Fort Lauderdale, you have Stewart, Florida, West Palm Beach, everywhere. Nashville, you know what I'm saying? I ain't gonna mention Memphis. Memphis is a train wreck. It's a train wreck in Memphis. Oh my God, train wreck in Memphis. Jackson, another train wreck in Jackson as well. But you're beginning to see a lot of contraction there. But the strategy that is actually gaining steam is lease options or lease purchases or lease to owns, depending on state that you're in, because it gives the tenant an ability to be able to lease a property, as Cliff said, buy it at a price point pre-negotiated at a later date, but they get to also make some adjustments to the property. Now get this, your cash flow is higher on lease options. It's higher. And I just said, what in the world? They're higher, and you get a large amount of cash up front. Think about it. If you're leasing a property out, guys, right now, you lease property out right now, it's regular lease, you're getting what, first and last month's rent and the security deposit. And typically, if you have a property management company, that money goes to them. It ain't go to you. I mean, you get 1 month, and we still got to pay in taxes, insurance, which is fine, no problem with it at all. You maybe netting $200-300 a month, maybe $100 a month. After that's net. At the PM fees and other fees, right? Lease options, you get 10, 15 grand up front in your pocket. And your cash from probably $300, $400, $500, $600 a month. Depending on how you structure it. Am I right, Cliff? Am I wrong?
No, it's smart. And then you could even, because it's a lease option, you can negotiate. Everything becomes negotiable. I think probably the smartest way to, if you're going to construct a lease option, the smart way for everybody from my perspective is do a lease option.
Yeah.
And if they have no missed payments for 5 years, it converts to a long-term note at a high interest rate.
Ooh.
Right?
Yes,
now, I would, as the owner, I'm like, cool, it converts to an interest rate. Yeah, how much? Let's say 8%, 9%. Cool. I'm getting strong cash flow at that point into the person who's been there. If they can't get out the note for whatever reason, they got a note now.
Yes.
Again, it's a win-win.
Yes, and your boy Alonzo said on YouTube, whoa, lease options is new to me. This is great. Lease options is powerful. Now watch this, guys. Cliff is right. How to be structured mine. I'm giving you the game. Give you some game now. A 24 to 36 month lease, right? With a pre-negotiated price point. I may even say every 12 months, it goes to 5%, maybe, depending on your negotiating, you know what I'm saying, which is fine. But at the 36-month time frame, if they cannot get a mortgage because of the market, life happens, I'm okay with that because I just converted over to a seller finance note at a higher interest rate like Cliff was talking about. Now that becomes attractive to banks. So if you ever want to get out, you can sell your note in 12 months, but you have 36 months of seasoning already. See what I'm saying? So you kind of re-inverted a flip, what you've done. So it's a little bit of a longer term, but you're getting a lump sum up front, monthly cash flow at a higher ROI, and at the end you get a higher LTV on them buying the debt from you. I've done this so many times it's ridiculous. If you agree, man, you disagree.
Yeah. No, I agree because, like you said, it's smart from multiple positions, but you also have to remember that 10-15% that you're putting down is going towards reducing the value of the property. Correct. So now for you to go get a loan, the value may be, let's say, $500,000, but because you put $40K down, it's actually $360 you're trying to get a loan for. So it's easier to try to go and apply because when the appraisal comes back, it's going to be much higher than the actual contract price.
Correct. That is correct, guys. Again, for me, lease options, lease purchase, lease to owns are probably the creme de la creme in this marketplace because it's a win-win for both the investor and also the tenant slash buyer. Win-win. Win-win. I'm just saying. And you get a higher yield, a higher spread. So I know when I was doing this back in the day, Cliff, I had banks calling me all the time, wanted to buy my notes all the time. Because I, at the time, was collecting 10% interest rate, right, back then. And they were collecting, 3%? So whose notes were more attractive? Mine. And I had 12, 24 month seasoning. So they're buying 95, sometimes 90, 93, 95% LTV of my value of my note. So if someone owed me $100,000, right? And let's say my debt service on that was $75,000, right? Everybody at 95%, right? So the $100,000, 95% is $95,000 minus 75%. And they pay all closing costs. I pay no closing. They pay all closing costs. They do. I netted $20,000.
Right.
On just selling the note.
And you still got that 10% up front too.
Sure did.
Right.
So I really made $35K plus the cash flow for 24 months. Do the math. So I'm pushing $45,000, $50,000 on one property. That's just one. Do that 10 times. Do it 10 times. Again, guys, it's not hard to do at all. It's a win-win for everybody. Your boy Alonzo said, game, fellas, y'all giving this knowledge. Yes, sir. Now, let's go over to something that Alonzo may be very familiar with, guys, real quickly, okay? Let's switch it over a little bit, real quick. And this right here kind of shocked me a little bit, Cliff. It was this here. Man, 401ks, are they at risk? Why? How inflation impacts retirement savings and purchasing power. We know how inflation works, but what's happening is we have two problems. We have actually really one problem, but two. Inflation, but it's due to the fact that we have an inflated amount of debt that we owe as a nation. And there's a strategy that the government's using to inflate the debt away. And guess who's there caught there kind of sitting there holding the coins? The retail investors, the 401k investors, the IRA investors. And you're going to see why in a second. We got to bring in our partner, Mark Moss, on this one, right? And he gave a perspective, guys, that kind of really allowed for me. I said, what is this again, man? This really shook me a little bit, but listen to what he has to say, guys. He's going to break it down, and we go from there. Here we go.
There's a $13 trillion lie sitting inside your retirement account right now. Not a risky bet, not a bad investment, a straight lie. Now, the people that are running it, they have a fraud score higher than Bernie Madoff. But what makes this so bad, so dangerous, that this time, the money isn't coming from Wall Street or the banks. It's coming from your pension funds, from your 401ks, your retirement accounts. This belongs to teachers, to nurses, to firefighters, and maybe even you. Now, when this unwinds, the fund managers who've already gotten paid, they're not gonna take the loss. You will. So here's exactly what we're gonna cover in this video. What this actually is and how it got inside your retirement account without your knowledge. The specific math that proves the numbers are fabricated. And the two ways this probably ends, so that you can end up on the right side as this whole system breaks and destroys an entire generation of savers. And by the end of this video, you'll understand something the SEC completely missed and that one guy with a laptop exposed, and we're gonna break it down. So let's go. All right, let's jump right into it. We have a lot to break down. Now, this is on the back of a lot of research that's been put together by some other people. We'll link to their original research down below if you want it. But we're gonna talk about this $13 trillion lie. This is really dangerous if you have a retirement account, a pension fund, a 401k, whatever you have. And I do wanna say just real quick, this is a lot of work that we do, bringing these deep dive theses all the time. And if you wouldn't mind doing me a small favor and just hit that subscribe button right now, it'll really help out me, the rest of the team that we're all here working really hard. It'll also help other people that need to see this, get this information. All right, let's break this down. So the first thing, this is all revolving around something called private credit. Now, over the last week, you might have heard about this because it's becoming a pretty big deal, but most people have never heard about private credit. They don't understand what it is because, of course, you haven't invested into it. You don't even know about it. But basically what private credit is it's credit that banks won't approve. So typically the banks issue loans. They give you credit. They give you business lines of credit, business loans, small business loans, things like that. But when banks won't do it, when you're so risky, when you're not good, you don't have good credit worthiness, then the banks won't approve it, so they go to private credit. So that already tells you right off the bat, it's like prime, subprime, and then banks won't even touch it, so go to private credit. Now, this is something that we're calling a shadow banking system. Why? Well, the banking system really has three purposes, right? So we have storage of money, we have payments, And then we have loans, right? So they're doing all the loans, but not in the traditional banking system. It's a shadow banking system. Now, the reason why we call it shadow is it's not in the light, but it's also much more dangerous. It's not really regulated the way that other banking systems are. And a lot of your retirement money is going into here and no one's paying attention. But we're gonna break this down.
Whoa.
Okay, now some of the big names, you've probably heard of Blackstone. They're one of the really big participators in this. Apollo is a big one. Blue Owl, they've been in the news a lot lately. I'm gonna break down exactly why they're in the news. But the question is, where do they get the money? But before we answer that question, let's just take a look at this. So you can see the growth of the private credit markets. This is going back to about 2000 when they were barely not even existent. But as you can see, even though banks keep getting bigger and the margin requirements keep getting dropped on banks so they can make more loans than ever before, the extent that this private credit is being used is going almost parabolic. Here we have, this is through about 2023. 2025, it's even higher. But you can see the rapid rate of growth. And of course, the red here is all in America here. So you can see it's being used in other countries, but it's mostly being done in America. So it's becoming really popular, but again, you've probably never heard of it. But let's take a look at this. Where does the money come from? Because this is the big piece that's gonna maybe irritate you a little bit. Let's break this down. So as you can see here, this sort of breaks down how the private credit system works. So what we have up here, private credit and investors and borrowers. So right here, this is the long-term investment horizon. This is the money that comes in. And right here, it says pension funds. So maybe some of your money going in there. We have insurance corporations. So if you have money in some sort of insurance policy, it's right there, sovereign wealth funds, and of course retail. So all that money goes into these funds that we're gonna talk about here. And eventually it comes down to these corporations that need to borrow money, that are maybe too risky, that can't get it from the banks. But it's coming from your pension funds. It's coming from your retirement account specifically. Now, the problem that makes this so dangerous is, as I said, it's like the shadow banking system, meaning it's not being watched, it's not being exposed, and it's not being regulated the rest of the system, the way the rest of the system is. And the problem is that we have a massive conflict of interest. Now, I said conflict, or is it a model? Have they developed a model that's a conflict of interest, but it's the way the model works? And they need the conflict of interest in order for the model to work. So let's take a look at how all of this works. Now, first of all, one of the big firms that we're going to use as our example here is Cliffwater. So what we can see is that Cliffwater Corporate Lending has been given an A as their issuer credit rating. So on paper, it looks great. Oh, A+, A, okay, that's fine. Looks really good. At approximately $40 billion in assets, Cliffwater Corporate Lending is one of the largest US-based perpetual life funds, perpetual life. So they loan money through that. And A means they have a long-term issuer credit rating. Okay, so they're really good. But how do they get that A credit rating? Well, it's pretty interesting the way that works. Let's take a look at this. So we can see here, it says a Bloomberg TV segment on private markets warns. So even TV is warning people, most people just haven't picked this up. They're warning that private equity, they have a very strong incentive. They have strong incentives. Charlie Munger would say, show me the incentives, I'll show you the outcome. Look at the incentives here. To cherry pick prices that let them reap higher fees at the expense of their clients. Of course they do. They want the most amount.
Cliff, this sounds, man, just like mortgage-backed securities as far as when it comes to incentives. Just like it. Just like
looks
it,
the
man.
same. It's just different ways for you to get credit at prices that are too high, hard to pay back, and private credit is happening. It's crazy. It's like you said, the mortgage-backed security. It's you're starting to see more companies use it. You see that growth, and actually, I think there's a bubble in it. I think there's going to be a lot of companies that are going to fall behind, especially with AI coming in. It's going to put a lot of pressure on them to try to pay back those loans.
Yeah, it is. We're almost done, guys. Mark does a really good job. We're going to get to the part that says cooking the books here in a second. You're going to see how it kind of ties into your, he's kind of let you know the pension side already, but I want you guys to see this, man, because it gets kind of, I wouldn't say scary, but be on high alert. Here we go.
Fees. The former SEC chair warns they do things to make sure that you keep getting your stream of management fees. So what they're doing is they're rating their own book. They're picking the things that have the highest fees to make their fund look like it's doing better. They cherry pick and they pay the valuation firm. So they have this vested interest, or this, I should say, conflict of interest, where they pay the fund or the firm to give them a good credit rating. And if they don't pay them, then they don't get a good credit rating. So that's why it's a conflict of interest. Now, if we peek under the hood and we start looking at the real data, we can start to see just how bad this is. And I put here, cooking the books, because again, this is all a conflict of interest, and that's how they're getting away with it. So if we go by loan, I didn't go through 2,300 loans. I'm using some of the research by this guy, Nick. I'll put a link to his full research down below if you want to get it. But we can see here, he went through and did the work that your regulator is supposed to do. He went through and did the work that you would hope that the SEC or some sort of regulator would do to protect you. Maybe your fund manager, pension fund manager. Of course they don't, because they all want their cut. But let's take a look at what he did. So he went loan by loan, 2,330 positions. That's a lot. Good thing we have AI today to do that. But he went through and researched hundreds of them. And here's what he found. 189 loans where borrowers couldn't pay cash interest. So we have borrowers who can't even afford to pay the interest on their loans.
Wow.
But instead of defaulting, instead of calling the loan due, which would cause them to mark those loans down, instead, they just let them roll it into their principal. I understand you're too broke, you can't afford your payments. Don't worry, we're not even gonna give you a delinquency. We're just gonna allow you to continue to roll that into the principal. We're gonna give you more credit because you can't pay for the credit you have right now. They saw that 58 of those were loans that had to be restructured entirely because they couldn't even afford to keep making the payments, and they kept putting it into the principal, and they couldn't afford that either. Over 50 loans where borrowers aren't generating enough cash to service their debt at all. So on paper, it looks like they keep making money. On paper, the fund's doing amazing. On paper, they report no losses, but when you peek under the hood, you can see that's not the picture at all. What the industry calls non-accruals. They carry on the book at full value. The reason why they want to carry on the book at full value is, again, so the fund looks like it's doing good. Not quite a Ponzi scheme, sort of like a Ponzi scheme. But the interesting thing is, the question is, how many of these non-accruals does Cliffwater officially report? What do they actually show? Well, the answer is 0. You see, so they're cooking the books. But how do they get away with it? Well, they get away with it again because they pay the rating agencies to come in and mark their book. And as long as they mark their book to still be active collateral, they look good. We can see right here. If the marks...
So guys, he goes a little bit deeper. It's a longer video, but man, Cliff, man, what I kind of see here, man, is on this video is he made a point up front. He talked about how people's pension funds, because you know retirement accounts are invested in pension funds. They are. And so what's happening is, he said, money is flowing in these type of funds here, right? These high risk funds. Well, what's going to happen is as they're trying to inflate the debt away, what do most of these funds actually hold? Your pension funds and retirement funds. Treasury bills, T-bills, government bonds. So when they're trying to inflate the debt away, Cliff, what actually happens, and flowing through this type of negligence here, this type of modules here, as the dollar goes down in value, who's left holding the bag? The retiree. Am I right, Cliff? Am I wrong?
Oh yeah, I mean, especially with the different type of investment firms that you have. That's where they're getting a lot of their money. That's really what they're built on, because the government's pension funds are billions of dollars. Yes, billions, and yes. They're a great investor because they can't ask a lot of questions. Yep, and they're okay with 6%, 7% returns. Mm-hmm. They're not like a lot of their other millionaire type of investors who want 15% returns, 20% return. Correct. They're not trying to get crazy, so it's really. So they're going to use the pension funds in order to do that. They're going to play these games. They're probably doing the same thing they did with the mortgages, which is you take your bad debt, you put it together with your good debt, yes. And now that is all one new piece of an investment in terms of the loan, and they can sell them.
Correct. That is correct, guys. This is how they also sell cars. Like when you go to dealership as well, they actually put together a pool of loans or deals, and they sprinkle in a subprime, right, or below subprime, like bad ones. They say, hey, if you take this one, we'll give you these good ones. This is how they actually negotiate deals when it comes to just buying cars. If it's done financing cars, if it's done at that level, guys, you better believe it's done at that level on this bigger end. It is, guys. And what I'm trying to say is, I'm saying this, guys, take a look at what your investments are invested in when it comes to your retirement account. Know what your money's flowing. That's all I'm saying. Because there's some games going on behind the scenes. If you don't know what the games are, you're going to get hosed. Am I right, Cliff? Am I wrong?
Yeah. You got to understand what's happening behind the scenes and how the game is being played, because what you have to understand is it's two reasons. Number one, if you don't know what's really going on, you're missing opportunity. And number two is if you don't understand what the games are going on, the games are being played on you. So you got to be able to understand from both scenarios what's happening.
Gotcha. Now guys, let's pivot over to our last topic real fast, guys, and then we'll be out, man. Yo, not that one. This one. Yo, Cliff, man. This one here is what you and I want to talk about real fast. I want to make us a little smaller there. Guys, this topic right here is near and dear to me and Cliff because of the fact that we've been burned on this a lot. Am I right, Cliff?
Oh, yeah.
If you don't choose the right general contractor, matter of fact, Cliff, let's talk to people like that. They're intelligent, but let's give them definition. What is a general contractor? What is that?
So a general contractor or a GC is someone who's in charge of the project. A lot of times they're the person you're paying, the person you're going to in order to make sure that the renovation goes on time and on budget, right? A lot of times the GC has subcontractors. They are not putting in the flooring. They are not painting the house. They're hiring a painter and they're hiring people to do the flooring.
Gotcha. So you have a general contractor who's the head, and then a subcontractor. Cliff, as an investor, who do you mostly deal with? A general contractor or a GC or a subcontractor or a sub?
It depends. Now it depends. When I first started off, I used a GC. Because, it's easier, right? Now you got to watch out because you have to understand the rules of working with the GC, because most of them, it's just the truth. They're going to just take your money and run.
Yes, they are.
They are going to take advantage of how you pay out and your distribution.
Correct.
You already know my system. And I'll give away the game a little bit too. My system is, what I like to do is I give very little up front and I start with demo.
Correct.
I give them, hey, I give you just enough up front to demo. Because if you can't show up on time and you can't demo a property, you ain't going to be able to do the rest of it.
No.
And so that's all I do. And then what I do for the first probably 30%, maybe 50% of the is once they get done with the demo, then I give them just enough to get the next project started and rolling. And then you just kind of pay it out from there.
Gotcha. Now, typically, guys, GCs, what they're going to do is, I'm going to put this up real fast. What they're going to do, guys, real quickly here, is they are going to do this here. They're going to ask for 50% up front. Don't do that. Because they do there's something called floating to the next project, right? So therefore, if, let's say hypothetically, you have a $50,000 job, demo is 10K, demo's 10K, right? They want 50% of the 50,000, so 25K up front. They say I have to get materials and get the dumpster bin out there. They're gonna give you all this sob story. Do not give them half up front, because they're gonna use that to float that to the next deal. Am I right, Cliff? Am I wrong?
Oh yeah, never give them that. You're right. They're gonna request it. You never do that. Dale was right. Like I said, do it the way I'm telling you, which is you give them 10% or a little bit up front to do demo. Yep. Once they're done doing that, then you work out what the next one is. You break that out in the stages. Let's say it's painting. You say, cool. Are you painting the exterior or the interior next? They say, we're gonna do the exterior. You say, cool. Here's, painting the exterior is 5K. Cool. here's $2,500 for materials. I'll give you the other $2,500 when you're finished.
Correct.
And you kind of keep going on that, then you do the interior, same way.
Yes.
Bathroom, kitchen. And so you're always, once you see halfway through the project that your GC's showing up on time, they're doing what they say they're going to do. Now you could say, cool, here's 25,000, here's 10,000, finish it the rest of the project, because you trust them by that point. But trust has to be built up along the process.
It has to, guys, because if you don't, if not, you're going to. I'll give you an example, guys. I'm gonna give you an example of us, mainly Cliff, really finding out what somebody was playing games. It's what we were doing a remote Florida renovation, and the guy said he needed, I think, $25,000 to paint the stairs. It's a mansion. Stairs, and Cliff was like $25,000. You're like, wait a minute. What are you paying again? The stairs. Which level? And he told him the level. Cliff said, "What's the square footage of that?" Of that. So the guy gave square footage. Cliff understood the cost of the paint and how much it would cover per square foot. So he was able to calculate. You don't need 25,000. You really only need 8 to get everything done. And really, I'm only going to give you 4 up front to get everything done, to buy the materials. Now, the guy did say, well, I get it from my own guy. Cliff said, no. We'll buy it, and you go pick it up. No problem. No problem. Am I right, Cliff, or am I wrong?
Yeah. That's usually how I like to do it. You break everything down into smaller parts, and then when it comes to material, don't worry about material, because Home Depot has, I'll give you some more game. Home Depot has what's called a pro desk, right? A pro desk, right? And that's where your contractor can just go pick up the material and you could pay for it.
Yes.
Cool. So he doesn't even have to worry about, what material. No, I already got it picked out. And now with AI, you can pick out all the material easy, and what the SKU numbers are and all that. Easy. Give them the list. Home Depot have it ready for them to pick up, and then you could pay over the phone. Guys,
that's simple. Not hard at all. Now, here is the bad side of this as well. We're doing another remote renovation in Ostrander. Was that Indiana, Cliff? Ostrander, Ohio. Yeah. We had hired a GC to go do the job, and it began well. Then all of a sudden, the dude wasn't answering the phone no more. We're like, what's going on? And it was a major renovation. It was $67? That was $116,000. Yeah, it was a big renovation, huge renovation. And we did it remotely, and we do this very well remotely. But when someone's not answering the phone, you're like, man, what's going on? And all of a sudden, the guy just vanished. Now we get a phone call from one of the subs saying, hey, the GC didn't pay me my money. And we asked, why you calling us for? Because somebody gonna pay me my money. And I said, man, hold on, player. And dude was like, if I don't get my money, just know that stuff is going to begin missing. HVACs outside, they may pour down a cement down your pipes. They can do a lot of damage because construction is not regulated. It's not at all. So how do we make it right? Well, we got on the phone line with him and negotiated with him and made him the GC, and he finished out the job for us. Am I right, Cliff?
Yeah, man, that was a big project. Especially when I think when we started recognizing, when he stopped responding, I think it was the kitchen.
Yes,
we had cabinets supposed to be coming in, and it was delay after delay, and he kept saying they were coming. We said, give us the name of the kitchen company, and once he gave us the name of it, he bounced because he knew that it wasn't coming. I think it wasn't paid, or half paid or something like that. And that's what he kept saying, it was a delay, but really he hadn't paid them out yet.
Yes.
And then we had to negotiate with them, settle that, and then we had our other subcontractor take over. And thank God, because he was great. Once we got the sub was
awesome.
Yeah.
Awesome. He got paid. He was happy. Everything was good. And the property sold for double than what we bought it for. Triple, actually. Triple for what we bought it for. So it was a good deal. it was kind of tough going through it, but we got it done. It took us an extra 60 days to get it done, but we got it done. We got it done. It's that simple, guys. So again, this topic about hiring the right GC guys is real simple. Now, Cliff, there's 3 things, man, that you say when doing a renovation. 3, I would say, vectors or points, and but you don't choose 2 of them. What are those 3 things?
Oh, okay. You got speed, quality, and time. Or my bad. And speed, quality, and money.
There you go. Gotcha.
Yeah.
And the thing about it is, and money means cost. And so, but you only choose 2 of them.
Right.
You only choose 2 of them. That's it. So whenever you look at a renovation project, look at, okay, these are the 3 things: speed, time, and money. I'm sorry, speed, quality. I'm sorry, and money. Speed, quality, and money. Those 3 things, right? Only choose 2 of them.
Yeah. And what I choose is money. I try to keep my costs low, and I choose quality.
Me as well.
Speed out. If it takes an extra month or 2, I'm cool with that. If I get a completed project that's
correct,
on budget, and the quality is good.
Correct. He is spot on, guys. We normally choose quality and cost. That's it. Speed, we can do something with that. Ain't no problem with that. Ain't no problem. But guys, this is we gave you guys some free game on how to choose a general contractor. And I always say, lastly, get 3 bids. Get 3 bids and know your damn numbers. Cause they're gonna screw you over. They are. Am I right, Cliff?
Oh yeah. I mean, it's very rare. I mean, even I've had contractors, screw me over after. I'm talking about on the 3rd project. So the first one, cool, no issue. 2nd project, no worries. 3rd, now all of a sudden you give them 10 racks because you think you did 2 houses together. You give them 10, they don't answer the phone no more.
Guys, the construction industry is not regulated at all. It's so you can literally go to jail, get out of jail, and go right into working as a construction worker with no background check, nothing. I'm saying.
Yeah, and there's like I said, we'll give away some game too. Nobody knows about this, but there's 2 different ways that you can find a good GC.
Mm-hmm.
All right, now get your notepad out, write it down a little bit.
Write it down.
All right, so number 1 is go to Home Depot and talk to a manager. Who's the contractors who are buying here all the time that you see them around? They're doing work. Cool. See if, hey, can I get their number? You can give them a call. That's one way. The second way is, where is there a lot of construction work being done in your city? So there's a part of town where there's a lot of renovations going on. Drive by, stop by, and go talk to them. Hey, I see you're working on this house over there. You get to see their work. You get to see their crew, how they're managing it, just by doing that. You get to go, oh man, the house looks nice. You did the flooring? Yeah, we did. Okay, cool. You get to see all their work, and you can just do that driving around a neighborhood. Next thing you know, you do that 2 or 3 times. You probably got 5, 10 contractors that you can start asking bids for.
You got it. Guys, we gave you guys a lot of game on good GCs. A lot of game on GCs, and know the acronyms. GC stands for General Contractor. Subs stands for subcontractors. Know the acronyms. Know them. Because if not, people are going to look at you crazy. Okay, so guys, that's all I got to say. Now, lastly, guys, before we end, guys, you have a licensed appraiser on the screen. His name is Cliff Hunter. That's what his name is. Cliff, man, tell about hunterappraisal.com.
Yeah, just go to hunterappraisal.com. We have a form just filled out. That's for anything. If you're looking for an appraisal or you're looking for consulting, we do that too. We actually had somebody we helped out who was looking at building a subdivision. So we helped price it out, made sure that he was subdividing it correctly. Just doing all those different steps. We've been helping out GCs who want to be able to add an additional value to their clients by saying, hey, look at the value you're going to have doing the renovations for us. Correct. So we do a lot of different things, but just fill out the form, give us a call, and we'll be able to help you out.
Gotcha, guys. Again, to have access to a licensed appraiser, commercial and residential, that's pivotal, guys. That is pivotal. This is not normal at all. And also, if you have access to a private investor, a private equity investor like myself, I'm here as well also, guys. We are giving away a free book, guys, real quick. We can just wait. A free book called Distressed Property Investing, guys. It's free. You get to peek into our brain and peek into my brain and say, how do I locate a distressed property? How do I, in this marketplace, in any type of market? It's a free ebook. All you gotta do, guys, is click on the link below in the show notes, scan the QR code, or guys, DM me the word real estate. Goes right out to you guys. And it's completely free. Don't want nothing from you at all, guys, at all, period. Cliff, you want to say anything, man, before we get off your dog?
Nah, man, same thing I say every time, man. You're only one deal away.
One deal away, guys. And if you could, guys, in the chat, say congratulations to my daughter. Her name is Gabriella. Man,
Gabby, congratulations.
Yeah,
I know
baby.
you put in a lot of work.
Yeah.
I know it's tough, but you got a lifetime ahead of you now. You're going out in the real world, man. But congratulations.
Yes, sir, man. Thank y'all, man. Tomorrow I'm gonna be crying. I am like a little baby. That's my baby. That's my first boy, baby. My baby.
You got the signs of the clapper or something?
See, this is private school, so it's just not like public school. We can't be too loud, you know what I'm saying?
Oh, it's not like them. You can't. So, it's a private school. I forgot. I thought you could get loud. That's my.
No, sir.
No,
this is gonna be at a local church, man. We're gonna be singing a little bit, which is fine. I gotta tell the family because y'all, we roll deep. We roll deep. Hey, y'all, we can't. We can't. This ain't public school. It's private. We don't want to get kicked out of this. All right, y'all. So afterwards, we can get loud, no problem. But not doing the service. Not doing the service. But yeah, it's gonna be good. But I'm gonna be crying, y'all. It's gonna be all good. All right, y'all. Well, God bless you guys. You know I end it every time. Before you leave while you can, you see me look better than you. All right, guys. See you guys next week. All right, y'all. Peace. My whole thing is, one thing I hear a lot of the times when it comes to anybody in real estate is, I don't have the money or the credit or the time or the intellectual property. And I said, okay, no problem. I have the money, have the credit, have the relationships. I'll teach you how to locate a good deal, right? Buy below wholesale.
I love that.
And once I teach you that, right, I'll bring me the deal. I help you underwrite the deal, which is fine. I'll even fund the transaction for you as well. So there's no excuses on the table at all. That's why we call that the cash flow club, period. So what happens is people always ask me all the time, Dale, can you train me? Well, I don't have the time to do that. But what if I set up a platform for it to where you get on-demand training? Anytime you want to, because the training you may need may be after you get off work, early in the morning, during the day. You just log into your account and get the same training as if I'm sitting there one-on-one. We're talking about our attorneys, our general contractors, our appraisers, as well as me, talking about how to structure your business, how to put together what they call a power team. A power team is very important. How to put a deal together, right, and buy it at the right price point. How to market. That's one technique that people don't understand. That you can actually get a list of properties that from your city for free.
Whoa. So walk me through that. Like, you can physically get buildings or homes or properties available for free?
Yeah, I'll send you guys the bill in the mail. It's real simple. What you can do is you can actually call down to your city and ask for the violations division. What happens is you say, hey, I want to see what homes in our city actually have violations. What are violations? High grass, no paint, vacant. You have boards on there. Those are actually violations that the city or citation that the city has actually levied against that property. They'll give you that list for free. It may be a little bit of a fee, maybe $100.
Sure.
But it is what it is. Then what you do is you actually you can contact those sellers of those properties one-on-one.
Wow, and that's how you make your money. That's one way. That's one way.
If you'd like to learn how successful real estate investors make money when they acquire real estate and not when they sell it, click on the link below, swipe up, DM me the word to real estate to download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed. I'll let your partner and download the ebook today. What's good, guys? It's your partner Dale here, man. Hey, I always say that when it comes to real estate, I think this is the best time. The next 3 to 5 years is the best time, in my opinion, to begin to invest in real estate. Whether you are a seasoned investor or a novice investor, this is the best time, in my opinion, to invest in real estate. Now, why would I say that? It's very simple. Whenever there is some stagnation within the real estate industry, that's the best time to get deals, right? Deals are what attract the capital, right? A good deal will always attract good capital. Now, what's a good deal? Well, I like buying distressed properties below wholesale. The skill to buying right is learning how to locate distressed properties in your city, county, or state. Now, the good thing about it is we are giving away a free ebook called Distressed Property Investing. We talk about different ways of locating distressed properties in your city, county, state, what to look for, who to call, things of that nature. It is free. Once you master this type of skill of locating distressed properties, you'll never be broke ever again, because good deals attract the right capital. All right, guys? So to get the free ebook, click on the link below, scan on the QR code here on the screen, or you can DM us the word real estate and my team will get you out this free ebook. Again, it's completely free. Just want to get you this information so you can begin to get the bag while buying real estate. Stay blessed and holla at your butt.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.